Hey gang, Roger Scott here. I want to do something really cool today. I want to spotlight 5 of my favorite ETFs right now. I haven't done this in a while, but there's a reason why I'm doing this. First, we're in full bloom on earnings season, and we've got a lot of federal data coming out this week. Number 2, we've got a lot of tension starting up with China. And number 3, we are like knee deep in earnings, and that means volatility. And when there's a lot of volatility on individual stocks, it's always best to put profits or take your money and put them in ETFs. ETFs give you more diversification. More diversification equals less volatility. You've heard the saying, don't put your eggs in one basket. So today we're going to do that. Also, momentum levels are very, very high. I wanted to show you something really quick here. Let me just go to a bar chart and I'll show you one of the biggest factors. I was looking at this yesterday and it's really bothering me. Take a look at this real quick here. If you look at S&P indices, right? The market's trading above the 50-day moving average, right? Only 52% of stocks, 52% of stocks, that's out of 500 stocks, right? There's 500 stocks in the S&P. Only 52%, so like 265 stocks out of 500 are trading above the 200-day moving average. The rest, over 48% of stocks are trading below the 200-day moving average. So that means the market is very, to say that it's bullish would be a very, very hard thing to say right now. I would say the market's cooling off, and technically it looks a lot more bullish than it does internally because of the market capitalization, and we've talked about that several times. So while the market looks like it's breaking out, and it does look like it's heading higher, when you look at it internally, when you look at the numbers, you only have 52% of stocks trading above the 200-day moving average. So to say this market is bullish or strong would not be accurate. And when you take into account the fact that earnings are here, well, that changes the dynamic. So when markets are overbought, I always like to shift away from individual stocks and into ETFs. And that's what I want to bring this to you today. I've been talking about these separately over the past several weeks, but I want to kind of bring them all together, introduce you to them, and explain to you why I like them. All right? Please, please, please write this down or mark this video because you want to have access to these. I've been talking about these ETFs for a while, and these ETFs are going to be on a tear for a while. So the first one is Online Retail Amplify ETF. You could probably figure out by the name of it what it does. It's iBuy. If you look at the chart of this ETF, you will see that it's doing amazingly well. Now, I brought everyone's attention to this ETF around $68, maybe even around the $61 level. Now it's at $88. But if you look at the constituents tells you what stocks it has in it. So you could see these are all online stocks. And right now with COVID-19 rearing its ugly head again, it may be a good time to go online. So we got Overstock, Peloton, Carvana, Revolve, PayPal, Etsy, Wayfair, Grubhub. I just named, for example, Overstock, Peloton, Carvana, PayPal, Etsy, Wayfair, Grubhub. Those are right there. I just named 5 of the best online stocks right now. Not all, but some. But the bottom line is if you go through this, you will find all the stocks that I love. Like, for example, I thought this was Zoom. JD. JD right now is killing it. Shopify is killing it. Netflix is killing it. The bottom line is, even if you want to find individual stocks, start here. The Online Retail Amplify ETF, ticker symbol iBuy. And again, it's doing really well. Next one, ARK Industrial Innovations ETF. Now, this one's really interesting. Let me show you the graph on this. I think industrial stocks are going to go through the roof right now, and I like the baseline right now. And why? Not commercial. Commercial real estate sales are crap right now, but residential real estate sales and activities are really good. And industrial stocks do well, especially when they're innovations. So let's look at the constituents. And again, this is near all-time highs right now. Tesla, Stratus, Xilinx, Splunk, Autodesk. These are companies that are making innovations right now in technology, industrial innovations. Remember, Tesla's not a car company. It's an electricity company. It's basically electrical. It's an electrical company, for lack of a better term. So you got 2U here. You got Stratus. I like this sector quite a bit, and I think industrial stocks are going to be moving higher. I love the way that this ETF is making all-time highs or treading near all-time highs. I love this baseline. I love to see stocks or ETFs making new highs and then basing out and going higher. That's really, really, really cool to see. Next one is Equinox. Now, Equinox is a REIT. What is a REIT? Real Estate Investment Trust. So you're probably thinking right now, Roger, why would I want to invest in a real estate investment trust? Commercial buildings are like in the worst case in the world. They are. But REITs, real estate investment trusts, don't just rent space to commercial real estate. They rent space to cloud computers. You know Zoom? Do you know how much bigger their business got? They need a place to store all these servers. Google, all of these cloud, NVIDIA, all of these cloud storage space, they need space. So imagine you're renting space not to retail stores, but to tech companies that need more online space. Now you're getting it. You understand? It's a whole different way of looking at REITs. And there's another type of REIT that you need to know about. It's a REIT that rents space to research companies, health research companies that are solving COVID-19. And I'll talk about that too. I might have talked about it before, but don't just look at REITs and say, oh, it's a REIT. They invest in commercial real estate. I don't like it. No, this REIT invests in its tenants are cloud storage. So again, it's a very, 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 it has tenants like Zoom, like NVIDIA, like Google. That's who rents from Equinox. So you definitely want to check out this REIT. This is the hottest REIT because these companies, these computer companies are expanding because of the stay-at-home rally we're seeing right now because of COVID-19. Everybody's using computers more. Computers are relying on the cloud. This company rents space to the cloud. Can it get any better than that? Ticker symbol EQIX. Next one, WCLD. I talked about this a few days ago. Cloud Computing Fund. Cloud. Remember what I just said to you? REITs, this REIT is renting space to all of these companies. All right? So Equinox is moving higher because there's more demand in cloud storage, and WCLD is the cloud storage ETF. Notice making all-time highs. Let's look at the constituents. You're going to love. It's like the best stocks. Fastly, love the stock. Zoom, love the stock. DocuSign, made like 50% return on it. Twilio, Wix, Datadog, Cloud, Shopify. Tell me I did not recommend 90. If you look at my recommendations over the last few months, tell me you don't recognize these companies, especially these up here. Remember DocuSign? Remember Datadog? Remember Cloudflare? Remember Shopify? Remember U2 or 2U? Remember Zoom? Remember Fastly? They're all here. You think it's a coincidence? People are spending their time with computers and the internet. And that's called the cloud. And that's why you're seeing this asset making all-time highs. Look at that. 5-year. Look at that. 2-year. 1 year. And this is a new ETF. And look at that. It's just rising. And lastly, I talked about this yesterday. Cars, electric vehicle, and future mobility. Now, here's what I love about this ETF. Investing in individual electric cars is very risky right now. Sure, you may get yourself into Plug, you may get yourself into Tesla, and maybe another company or two. But what if? Let me see if I could find the constituents. But there's a lot of companies right now, that are involved in the electric car business. And the problem is a lot of these companies, I have a cat running around here. So if you see a cat in the background of the video, I apologize. So take a look at what it's holding. It's holding semiconductors. It's holding BMW. It's holding Toyota, Beidou. It's holding every stock that has exposure to the electric car segment. All right. So it's not just going to put your money into Tesla and Plug, Nikola, and a couple of others. This is a very smart ETF. This is a future ETF, cars, all right? There's a reason it's near all-time highs right now. Look at that. I love this. I love this. So let's review. We got the iBuy, online retail amplify, right? Online retailers are smoking hot right now. And if you don't like these ETFs, take a look at the individual stocks, especially the top 5 or 6. Just go to constituents. ARKQ, Industrial Innovations. I love this one right now. It's got a lot of very, very cool stocks, and I think industrial stocks and basic material stocks are going to be rallying because people are not investing in commercial real estate, but with low interest rates, they're refinancing, buying new homes, taking money out of their homes, fixing their homes up. That's ARKQ, ARK Industrial Innovations. Next one. This is the REIT that rents space to cloud computers. EQIX. All right, this is the biggest one. There's DLR. DLR is another one, and they look exactly the same. But Equinox just a little bigger. That's all. You could go with this one, or you can go with DLR. They're virtually identical, as you could see here. Virtually identical. I actually recommended Digital Realty Trust long time ago, and it's been just going straight up. Next one, Wisdom Tree Cloud Computer Fund. That's who these REIT ETFs rent to. They rent to cloud computers, all right? So again, if you want, let me just show you the constituents here. I love these stocks. Fastly, one of my favorite stocks. Zoom, the fastest growing stock right now, relative strength-wise. DocuSign, I talked a lot about DocuSign. Twilio, I love Twilio. Datadog, Wix, I love these stocks. Right now, till there's a vaccine for COVID-19, the hottest sector is going to be the cloud, and the second hottest sector is going to be the ETFs that store the cloud, all right? Then we got cars, the electric vehicle, and most importantly, future mobility. This ETF is very well-rounded. If you love the idea of Tesla, but you don't want to keep your money in Tesla, putting all your eggs in one basket, cars is the place to be. Remember, ticker symbol KARS. Folks, I love these ETFs right now. Now, I got something big for you today. One of the smartest ways to gain an edge in today's market is to buy stocks right before Wall Street pours millions of dollars into them. Now, while that sounds like you need a crystal ball, it's actually pretty easy to identify those stocks ahead of time if you know where to look. That's the key. At least it's when you have an indicator that allows you to do that. Right? Gain an unfair advantage. Get an indicator that'll teach you how to predict future moves. Now, unlike just about every trading indicator out there that tells you about the past, this one reveals what's coming up next while helping you increase your overall profit, reduce your risk, and reduce your time in your trades. Time is money. The less time you spend in your trades to make a buck, the less risk you have. It's very, very simple. Now, folks, there's some very, very time-sensitive info here that you need to know about, like the #1 trade that I'm watching right now. Right now. Make sure you click on the link below. Check this out right now. Reduce your risk, increase your profit, spend less time in trades, follow stocks that are going to make a killing tomorrow, not ones that already made a killing yesterday, all right? #1 trade I'm watching right now. Follow the link below. Learn all about it now. I'll talk to you guys soon. And I hope you have an amazing day. Bye, everyone.